So we have a lot of new developments that we need to talk about quite urgently here on the channel. Now, some of this is pertaining to AMC and that trade. A lot of this has to do with the broad markets, and it does allow you an opportunity to potentially make a lot of money. So pretty excited about that one. Pretty excited to bring you guys this information. Hit that like button if you are currently watching this video. So that should be every single one of you guys, and subscribe to the channel if you are new here and if you do learn something. So what happened today on Wednesday? The S&P was down about 1%, and there's a couple different reasons for that. A lot of it, I would say, has to do with the Fed and reiterating this point that the terminal rate might be higher than what the markets are pricing in, around 5%. So the markets are starting to get a little bit fearful about that. Now, we do have economic data coming out tomorrow, and that's kind of the more urgency of this video. But then more importantly, next week, you're going to get CPI, and that's going to be on Wednesday. Now, you got one data point that came out today, which is not good for this upcoming inflation report. And let's talk about that first things first, and then we'll get into a major activist investor that just took a very big short position on the market. So you're looking at the Manheim Used Vehicle Value Index. Now, this is basically showing you how used vehicles have appreciated or depreciated in price over the years. So when this chart is going up, that is not a good thing for used vehicle prices. Well, this would be the COVID crash, the COVID drop, and things got pretty cheap here for a minute as far as used vehicles, and then it pretty much consistently went up after that. And this part right here, about halfway up the chart, was where inflation got to 8-9% year over year. A lot of it did have to do with used vehicles, because used vehicles is a decent weighting of the actual inflation report. Well, it's been coming down the last 6 months. Consistently, every single report has been lower. Well, now look at what just happened. This came out today for the month of January. You've seen a sharp uptick in the price of used vehicles. This is going to negatively affect the CPI reading that we get next week. Now, you're also seeing Carl Icahn. You might know him for many different reasons. We'll talk about kind of that whole situation, because Carl Icahn is someone that shorted AMC, shorted GameStop, that lost money initially the first round, and then continued to short the stock. This was one of the players that has never really publicly closed out their short position. So they're probably still open. At least I haven't heard anything about it. But you can pull up numerous reports that they're shorting AMC and GameStop. Pretty easy to find. But overall, he's an activist and investor. So a lot of people pay attention to what he has to say. And if you guys don't know what an activist investor is, it's basically a investor. A lot of times they're multi-billionaires, right? They got a lot of money. They come into a bad company, call it Bed Bath & Beyond. Or even what Ryan Cohen did with GameStop in a certain way. You come in to be an activist investor to enact change, and a lot of the time, I mean, your goal is to either take over the company or to really turn things around. So he's seen as a real influential person, call it that, in the money manager atmosphere, right? Call it Wall Street. A lot of people pay attention to what he does. Now, Carl Icahn just paid $50 million of premium for February 17th S&P 500 4,050 puts, like 4,050. It equals out to 405 on the SPY index. A $5 billion notional short position expiring 3 days after CPI. So he's putting out this trade, which is a very big trade, basically betting that CPI is going to go higher. That's the only reason that you would make this trade right now, because that's the only thing that could really derail this market, especially what we have just heard recently from the Fed. The Fed has said if inflation goes up, or if economic data, continues to impress, 500,000 jobs a month is definitely impressing everyone, then they're going to have to raise rates higher. Now, a lot of people might argue, and this is where you could get into some conspiracy theories, and I think this is actually quite relevant. The Fed just, as of the last couple of days ago, right? Just the last couple of days have been pushing this notion of taking the federal funds terminal rate higher, maybe to 5.5% or maybe 6%. You've had some numbers thrown out there, but the Fed's really pushing away against this pause, against the cut, but even against one more rate hike. They're saying ongoing rate hikes. You have had Fed Waller today, Fed Jerome Powell yesterday, that have said the same thing, as well as some other Fed members. Fed Kashkari has also said the same exact thing. Now, is it too crazy to think that the Fed knows what the CPI report is going to come out next week, and he wants to prepare markets for that now? Is it also a huge conspiracy theory that Carl Icahn might have some pull at the Fed and might know this inflation report is going to come in bad? I don't think that's a far stretch. It is February 8th, so after all, if you're calculating inflation data for January, you're probably done with that. You're probably just waiting to put out the report. I doubt they're calculating anything right now. It's already done. So it wouldn't surprise me that the Fed knows what this data is going to look like. After all, Fed Jerome Powell admitted that sometimes he gets data a day or two before it comes out. Maybe it's a week this time. Maybe it's a couple extra days. Either way you put it, I think it's setting a bad precedent for the next CPI report next week. And it could set the markets up for some pain in the short term. That's why I'm telling you guys this now. If you know how to trade this market, maybe there is some potential for you there to do so. If you guys want access to all of my trades in real time, link down below in the description of this video. A great place to be and would love to have you. Not supposed to be financial advice. It is simply what I am doing and what I am looking at. Things like this that not everyone's going to like, right? Broad market things, what the data is looking like around CPI, and specific trades, right? Not everyone likes that. So we like to do that over in that community. So it's not looking too good for next week. We will just call it that. Now, as far as tomorrow, the economic data that does come out, and tomorrow is Thursday, you're going to get initial jobless claims for February 4th, expecting 189,000 initial jobless claims. That is at 8:30 in the morning. If this number goes higher, that is going to be a positive thing for the markets, and the markets are going to rip. If this number comes in at expectations or even slightly under that, it's going to continue to show that the labor market is still running red hot, and the Fed will have to raise rates even more. And not to confuse you guys, I've been saying since the start of 2023, when the markets have been reacting positively to positive economic data, that was all with the notion that the Fed's going to raise rates like one more time and be done, right? The Fed's reiterating that even good economic data is not enough. You need to see inflation coming down, and you need to see economic data start to weaken. And that's something the markets have not really expected. The markets have been under this impression that if inflation continues to come down, if economic data starts to come in good, well, that's a good thing. That's a soft landing. Fed's over here telling you, no, we need inflation to come down and we need the economy to weaken. We don't even care if inflation comes down and the economy does not weaken. You need to see some weakening. So not a good thing. It will make initial jobless claims tomorrow that much more important. And then on Friday, you're going to get the big data point of this week. That is the Michigan Consumer Sentiment Preliminary Survey for February. The important parts are the Michigan 5-year inflation expectations and the Michigan inflation expectations for 2023. You're expecting these to come down by about 1/10 a piece, like 1/10 of 1%. Pretty reasonable, right? If they go up, that's going to be a big problem for the Fed, a big problem for the markets. As far as tomorrow and earnings are going to get in pre-market, Pepsi, AbbVie, Canopy, Philip Morris, Hilton, Kellogg's, Duke Energy, Toyota, Cameco, and Veru. Thursday and after hours, PayPal, Cloudflare, Lyft, Expedia, Aura, Dexcom, Bloom Energy, Alteri, Yellow, and Energy Partners LP. And then on Friday, you got a lot of random companies, but you do have Honda squeezed in there. If some of you guys are excited about electric vehicles and all that, that will be a big one for you guys to watch as well. Now, as far as AMC is concerned itself, if we take a look at the Ortex data, you do have 167% cost to borrow rates from Interactive Brokers, about 1,000 shares that are available to be lent out, to be traded. You do have a live short interest off free float at 22.5% and a live short interest reading at 116 million shares that are currently sold short. Cost to borrow average of 318.44%, cost to borrow max at 380%, and cost to borrow minimum at about 1%. If we take a look at the option activity for AMC, 78 orders totaling $24.88 million, positive order value of 8%. It looks to be that Bed Bath & Beyond news sparked a lot of fear, and what you've gotten out of the Fed has continued to spark a lot of fear. So today the markets were down about 1%, but in all reality, a lot of stocks were down a lot more than that. So it's really concentrated in your Apples, your large tech. That's what's really driving this market. But if you look under the surface, a lot of names are getting beaten down, and it's not something that is specific to AMC. The day that the markets are up, call it 2-3%, and like AMC is like one of the only stocks down, AMC, GameStop, right? Really those two. I don't care about Bed Bath & Beyond or any other stock. You got AMC and GameStop just plummeting. That's when you could say, well, something is really wrong with AMC and GameStop sentiment. Right now, everything is selling off, and especially if you are in technology or you're in a higher risk, higher reward kind of portfolio, definitely feeling the bite of that. Now, the last thing that I do briefly want to mention for you guys is this article from Yahoo Finance. It says AMC Entertainment Holdings is attracting investor attention. Here is what you should know. Now, goes on to say that over the last just month or so, AMC is up about 50%, and the earnings estimates, we are now projecting a loss of 20 cents per share for the current quarter, representing a year-over-year change of negative 81.8%. Over the last 30 days, the Zacks consensus estimate has changed 3.9% to the positive. So people are getting a little bit more bullish on AMC, and I would imagine that has to do with the flexible pricing on their seats, things like that, and that does indicate that the sentiment is strong under the surface on a more fundamental level. Some people say fundamentals don't matter. I would say that fundamentals are the only reason why people are actually short on AMC. Maybe not the only reason. Maybe there's the ego and the pride that has to do with that. But as the fundamentals improve, there's literally no way you could not see a short squeeze. If AMC all of a sudden had zero debt, you're going through a short squeeze, right? If AMC all of a sudden was profitable because they just found gold under one of their theaters and they were set for like 10 years, AMC is instantly going to short squeeze at that point. That's why the fundamentals do matter a little bit. Not the biggest part of a short squeeze trade, but it definitely helps push shorts in or out of positions, guys. So that is really going to be all for this video. Like I said, brief look at the technicals. Brief look, guys. You really want to watch that 50-day moving average from this point on. That is going to be at about $5.51 per share. The 100-day moving average for that upside move at $6.20 per share. That is all, guys. We covered a lot here in this video. Hit that like button and subscribe to the channel, especially if you are still here. Most importantly, enjoy the rest of your day, and I will see you in the next one.